Okay. Hi, everyone. My name's Tal Schwartz. I write the Canadian Fintech newsletter. I'm also a general partner in Exit North Ventures. We're an early stage Canadian Fintech-focused venture fund. We publicly announced our launch a couple days ago. And I'm joined by my good friend Michael Garrity, chairman of Financeit and venture partner in Exit North Ventures. Michael, thanks so much for joining me.
Hello, everybody. Hello.
So, okay, we're going to talk fundraising. So, Financeit, like the biggest business within your industry. You've raised successfully hundreds of millions of dollars over the years. But take me back to the beginning, when you were first building out the business, when you were pounding the pavement, pitching investors. What was that like? Just give me a bit of the backstory.
Well, if you'll indulge me, maybe what I'll try to do is to say, what's the business for those of you who don't know the business that we have now and what stage we're at? Why don't I start with a description of the business that we have today and the stage that we're at, and then when I take you back to the beginning and you hear how we almost died so many times, you'll be like, oh, okay, well, for those of you who are entrepreneurs, and maybe just a show of hands, how many entrepreneurs in the audience, by the way? How many entrepreneurs? I love that your hand's up. Can you stand up just for 1 second? Look at this, the youngest entrepreneur in the room. Everybody, clap for this guy. And honestly, you can ask him to pitch you. You don't even have to ask him to pitch you. He's already pitched me twice, right? He's like, you guys look the same. I'm just going to pitch you again. I love that. Honestly, I love that guy. So here's the company that we have today, Financeit. We are Canada's largest point-of-sale financing company for the home improvement industry. Just to give you a sense of scale, we have about 10,000 merchants that offer our product every day. If someone comes and replaces your furnace, or you go to Home Depot and you don't pay for 6 months, someone offers you a payment plan, there is a 92% chance that's us, right? So we own 92% of the market share of the business that we have. Technology forward, mobile forward, payment plans in the ether, embedded in the transactions of predominantly home improvement. We do some other stuff, but predominantly home improvement. And we do about $2 billion in annual originations. We have about a $4 billion annual loan book. We're only in Canada today, despite the fact that we tried to go into the US a couple of times and that failed. Another part of the story that we can do. And just to give you a sense, we're about $400 million in top line, about $100 million in EBITDA. That's the company that we have built out of nothing. So let's start with nothing then, right? Which is, you come up with an idea. My first idea for the company was called Community Lend. So Financeit, Community Lend, Exit North. You start getting the pattern. I'm very literal in the things that we do. I don't have any creativity whatsoever. I only name things literally. So Community Lend was meant to be peer-to-peer lending. I thought it was a great idea. It seems not a lot of other people did. And so we started the company. My wife was my first investor. We're still together, by the way, which is in and of itself a remarkable story, more of a testimony to her patience. So she was the first investor of the company. That was the easy part. But then we raised some more dough and ultimately had to go to angels, had to find a lot of people in the US. I basically begged, borrowed, and stole as anything that we could to try to get the company started. You're on a pitch deck and an early idea and trying to get momentum and trying to connect in communities. And I think all of this is going to relate back to what we're trying to do with Exit North. What we are going to do with Exit North, not trying to do. And it was really tough to find those communities of angel investors, people that are willing to back you. And ultimately, we raised $2.5 million for the company. And that was our first round. Right after our sort of seeding the company was our first round. It was really, really hard to do.
And who was that from? What type of investors was that from?
I was very lucky in the sense that I had connected with a couple of folks in the US, and that was a nothing amount for investors in the US. So I had a couple of angels who participated. I was lucky that I had some networks in Canada that were people that had been seasoned entrepreneurs that had run a company, sold it, made some money, and they're willing to put money back into things in the ecosystem. Again, a hint of what's important in terms of driving activity in the space is ecosystems and people who've been there and done that. And very, very lucky, as I'll tell you in a second, to have someone, one of the anchors who invested in the business, was a successful entrepreneur who had exited, made a lot of money, put a bunch of money into other companies, made more money, and then made a bet on us. And it was an absolute bet. And when Community Lend was failing, and it was failing, we had this moment where it was failing. The idea wasn't working very well. We had this realization we weren't going to turn it into a viable business. And I wanted to pivot the business in a different direction. I'm like, hey, the space is big enough, financial services. We understand lending. We understand the technology. Like, we can pivot this thing into something that would make sense, point of sale lending. And we had one individual who had been there and done that and helped us to convince everybody else, don't return capital, don't take a zero. Let's pivot with him and turn this into something else. Because that's way better than getting 10 cents on the dollar back on whatever capital they've got left. And it was that influence and that mentorship and that understanding and that prescience that allowed us to be the business I just described, in the opening of who we are today. Otherwise, we would have gone to zero, and I would have felt shame and sadness, and maybe wouldn't still be married. I don't know. But so that concept around people who are in the space, people who get it, people who've exited companies before, people who know what it takes, people who know it's hard and you have to pivot, that is essential. The difference between success and failure in so many cases.
And so much of early stage investing is investing in the entrepreneur, investing in the person, because you know that there's a pretty high likelihood, right, that this entrepreneur may be building the business that they're pitching you on, but there's a good chance that they may also pivot into something very, very different. And the through line, the consistency is going to be the entrepreneur, that the person has the conviction to go and build a business. So you've pivoted, you've successfully kept a lot of the same capital in the business. You're still married to your wife. How did fundraising evolve for you? As you scaled, did you get better at it? Did you hire people to help you? Did you look for different types of investors? What was that like?
Yeah, so the fundraising community in Canada is difficult, right? I think that's why one of the reasons we produce amazing companies in Canada is that the resilience you need to show to get companies off the ground here and to raise enough capital for velocity is much harder, right, than fail fast. Like everyone in the valley, whenever you go down to the valley, and it's like this little special fairy tale land where everyone with an idea at a coffee shop just raised $10 million on $1 billion pre-money valuation. And you're like, what the hell? Anyway, but I think but they fail fast down there, right? Fail fast, start another company, fail fast, who cares? In Canada, don't fail, right? Don't fail, because everyone remembers when you do. So don't fail. So the idea that we build resilience here in our community, I think, is one of the things that helps us build great companies. We did the pivot. I lost a lot of the team that was originally part of the first idea. I was lucky enough, Casper, the CEO of Financeit, is here, and I think is on the next panel. I'm staying for it. It's going to be awesome. I was lucky enough to attract a whole bunch of really dedicated people that came to the pivot, the new company. I was able to put together a bridge round because of that individual who said, I'm putting dough back in. I'm going to help them bridge, right? It's going to be punitive. The bridge will be punitive. It's going to hurt. That'll build more resilience for them. And we were able to put enough capital together to get to another milestone. And that other milestone was redoing the platform and getting our first lender to commit to putting capital behind the new idea, which was Financeit, point of sale lending, right? And that's what got us to that point, that bridge, painful bridge capital, kept the structure in place. And then we were able to get to that milestone and raise an additional round. Your question was, does it get any easier? Of the 7 rounds of capital raising, the only one that was easy was after we got purchased by a private equity firm. And then I just said, hey, I want to buy something. It's going to be X $100 million. And they said, sure. No, that was the only easy one I'd ever done. The rest of them were painful.
So you kind of started to talk about it a little bit there. There's building a a lending business specifically is pretty tricky, right? Because there's an equity piece and there's a debt piece, and you're kind of fundraising for two businesses almost at the same time. What is it like in the early stages balancing both? And does it, I guess, which one comes first, and does it get any easier as you grow?
Yeah, I think I don't know, it does get easier. Like you get velocity, and the more your assets have a tendency to prove themselves and the performance of your team in making good bets and managing risk well and managing corporate risk well, you lower the risk threshold for the lenders that want to get access to your asset class, but just don't know if they trust you, right? And so the longer you're doing this for, and the more time you can refer people back to a data tape with 10 or 15 years of history, the easier it is to raise capital. So for example, we just got a warehouse line originally from CIBC for $500 million, and then we got another $200 million from Goldman Sachs. And that literally took a month and a half of discussions. The first deal that we put together for the company when we did the pivot was for $10 million with one lender, ING Direct, which then turned into Tangerine. And Peter Aceto, who I don't know if he's here or not. Is Peter here? He's been at some of the past ones.
Yeah. He was at the event in May.
An incredible guy, and I was so lucky to have him have a combined sense of vision. They were living off brokered mortgages for nothing, and he wanted to diversify asset classes, and he was willing to back a startup in the ecosystem. So they had us on babysit money releases, which was fine. And they were our very first lender, right? And we had 10 million, go build a business now. Prove that you can build the flywheel and the velocity. 10 million turned to 50, turned to 100. And, we just kept growing, and we added additional lenders. Sun Life, who are here, amazing folks. VersaBank, who I think are here, amazing folks. RBC, again, amazing folks. We've done really well with adding additional lenders. And I'm not just kissing their butts because they happen to be here. They're really great partners and have been great partners in the business. And so that scaling, the beginning, it's very hard. You're raising equity. Nobody wants to bet when you could go out of business, right? So that first lender was crucial, absolutely crucial in being able to get the business off the ground.
And let's talk macro a little bit. So you've been in business for quite a few years. There have been some market cycles kind of throughout that. How do you think about taking a little bit of the risk out of fundraising in a bad market cycle? Something that you can't really control, but is kind of an inevitability of the business that you're in.
Yeah, there's lots of different ways to do a startup, right? And I think the Silicon Valley. Let's go back to sprinkling of the magic dust, Silicon Valley. They would tell you you just got to build scale. Whatever it takes, spend as much as you need to. Don't worry about unit economics. Just grow, okay? And because growth is what you're going to get valued on. In Canada, that's not the case. So you have to have the discipline here to focus on unit economics. You have to focus on trying to get as far as you can with the least amount of money possible, because money is scarce, and money for early stage ideas is super scarce, right? And again, that's the problem we're aiming to solve here with Exit North. But it is very scarce. And so to be disciplined in your spending and disciplined in the early stages of companies in Canada to really try to build for profit and go as long as you can on the limited amount that you can, there will be a time to accelerate your success, but don't be Silicon Valley here, right? In my opinion, the other people can have a different one, but be disciplined about your unit economics and your bottom line.
You've acquired businesses. You acquired your largest competitor in the space. You yourself have also been acquired 2 times, I think. What's it like being on both sides of the table? Do you learn things that make it easier for you to be better when you are in the other chair?
Well, when you're buying stuff, you can be a total dick. No, I'm just kidding. Don't be a dick. Yeah, listen, maybe there's a certain amount of empathy when you're constantly raising capital and telling your story and building your velocity and building your, how we're going to take over the world. Maybe there's a certain amount of empathy when you're doing that to people on the other side, right? Those young entrepreneurs who are pitching you, or the person that you're hoping to buy, and he or she is hoping to sell the company to you. You see them for I think oftentimes you see them for who they are, which are, usually people that are just, they're entrepreneurs. They got it in them to build something great, and they see you as a potential partner or stage along the way. And I find that empathy really helps you to make those connections. That empathy is going to help you when you're getting to valuation discussions. They want a lot, you don't want to pay a little. You got to find the Venn in between, bid and ask. And whether you're selling your company or you're buying somebody else, the success stories that I've seen in purchasing, and we've bought 3 companies, tried to buy 6. The most successful ones are where the person selling the business and the team that sells you the business is bought in on the long-term vision of what you're trying to create. 1 + 1 = 3, right? That's what our goal is. 1 + 1 = 3. How do we make that? How do we get on board and get that done? And that's where all the success comes from, is when you're able to do that. So yeah, it's been nice to be on both sides.
So you're no longer CEO. You're the chairman, which I think kind of allows you to be a little bit less in the weeds. Maybe a little bit it's easier to reflect. Looking back with 2020 hindsight now, is there anything that you would have done differently when you were building and funding this business?
Oh my God, how long do you have? So first of all, just because my CEO and my co-founder of the Financeit business is here, he would tell you I was never in the weeds, just so we're clear. It's not like I was in the weeds ever, right? I might have told a different story 10 years ago, but yeah, I was definitely never in the weeds. And so I think that there are, there's lots of things that I would do differently. I think we should have taken the advice I just gave about spending a lot more time focused on bottom line. I had a tendency to be much more aspirational in putting the company together. Let's do this and let's do that, and let's go 8 directions at the same time. One of them's going to work, and you end up, in essence, diluting yourself by the capital you raised versus the valuations you can achieve. And maybe part of that, and it was Ali, who's part of our Exit North group at the back. There's Ali right there. Sold his company, LendCare, amazing entrepreneur. He was saying, and I'm going to quote him-ish, never pull the thread of your history because you never know what alternative reality it might create, right? And so it's easy to look back and say, wouldn't it be great if we did 8 things differently? But then who knows where we kind of ultimately would have gotten to. Maybe, one of the 8 things we invested, the 7 that didn't work of the one that did, you would have invested in the wrong one, right? Who knows, right? But I think looking back, we could have been a little more disciplined and we would have had a lot more equity in the business at the time where we sold, either the first or second time. So
this fund, a big part of the thesis, as you've said, is that it's organized around and operated by exited founders. So, people who've actually built. And
let's call them out because they're here, right? There's a bunch of them that are here.
Yeah.
Right? Kathy at the back. Is there Kathy? Is that Kathy? Kathy, you going to put your hand up? No? Where's Kathy? Where'd you go?
Oh, yeah.
There she is. There's Kathy. So Kathy, incredible company, Paradigm, managed to sell to MCAP. Was wildly successful with that on Entrepreneur. She beat me for Entrepreneur of the Year one year. I'm still a little sore about it. It's fine. Whatever. She's a good entrepreneur. Second place is fine, right? In the end. Norm Capel at the back, right? Another one of our venture partners who sold his company and has been wildly successful as a result. And this canon of knowledge. And I think that's the folks, Ali, we'd already talked about. And those are the folks that made it. There's a couple more folks beyond that.
Catherine Dahl, who there's Catherine in the back of the room.
Catherine is here. Hey.
Founder of Beanworks, very, very successful AP automation company, which was acquired by Quadient out of Vancouver. And quite a few others, many of whom are in the room and have participated as limited partners. But really high profile folks, that have built amazing businesses, and what's special about them is that they've sold them, as well. Yeah.
And I think that's the point, right? Yeah. So I started with the story of that individual who was the person that helped us make something out of what could have gone the other way really fast. And there's lots of stories of entrepreneurs who get started and they don't manage to get what they get. And then they run out of capital and there's no one who's got their back and they go to zero, right? Might have been an amazing idea, might have been a great entrepreneur, but ultimately it is that investor group and that board that will help you in those really, really hard moments to keep the story going and keep the velocity going. And that's our intent, right? And I think every one of those folks that just put their hand up will have a story like that about some point in their history where it could have gone to zero, right? And it was those folks that they had around them, their investors, their board, who were likely the people that helped them to bridge and turn that into success. And for us, we collectively believe that we can help some of these early stage companies execute. Like ultimately just execute. They're probably, well, in all cases, they're great entrepreneurs. They always have great ideas. The markets are gigantic and problems they're trying to solve. But where they're going to screw it up, right, is on execution. And where all of us can show them the scars is where we were able to, luckily, find a way to execute and create value for our shareholders and for ourselves.
Totally. And I want to bring things back to Canada. This is a Canadian event. All the entrepreneurs that raise their hand, we're all building businesses in Canada. It's unique, and I think often, in the press, we hear a lot of negative stuff about how difficult it is to build a business here. Why are you bullish on Canadian tech? As someone that's done it already, and now looking to invest in early stage businesses that are trying to do it again. Why are you excited about it?
I think we have some of the smartest, most resilient entrepreneurs in the world. Straight up, par none, right? I think our immigration strategy in this country has given us a ton of incredible people with drive and passion to create something. I think our education system is one of the best in the world. I think our social infrastructure is one of the best in the world. The stability of our banking environment is one of the best in the world. We could use some better government, to be honest, at almost every level. That's a separate issue. But I certainly believe that we produce incredible entrepreneurs, and we give them resilience, and we drive them, and they make incredible contributions. I was just with Mike Wessinger this morning. I don't know if you guys know Point Click Care, and Mike Wessinger, just one of these incredible stories about a guy that could have built that company anywhere, right? 95% of his revenue is outside of Canada. He employs 4,000 people, most of which are in Canada. He's created $6-8 billion of market cap value. Like, these are the entrepreneurs. Like, there are a ton of these people here. We're going to back them and we're going to help them, period, right? Big round of applause for Canada. Come on, Canada.
Mike, I think that's a great place to end. I want to thank you for joining us, and thank you all for listening.
Yeah.